What matters is the structural supply deficit, the pace of restarts, and the fueling cycle on top of the contract market. And all of those statistics are very, very bullish.
Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are back with our commodities mentor, Rick Rule. Rick, thank you for coming back on the show.
Pleasure to be with you, Steve, and thank you for your contributions to the Real Classroom.
Yes, sir. Pleasure's all on this side of the table. I love doing it. Let's start out like we always do. Do you have any macro thoughts? Any opening salvo? What's on your mind today?
Boy, yield not to temptation. So much is going on in the world today. I don't know where to start. Um, Pitched battles in the street in the U.S. Uh, First thing that comes to mind is that Trump and Newsom need each other. They need to spark a culture war to distract uh, people's attention from the poor job that both of them do with governance. That'll make me popular with Democrats and Republicans, I'm sure, but that's okay. Um, the ongoing, I would say, inflationary malaise in the economy. I got a price quote yesterday for some landscape materials, double what those materials cost 3 years ago. That normally happens in a very healthy economy, but in a very healthy economy, you don't have a declining oil price and declining copper price. So I suggest that for most people, although you don't hear word of it in the popular press, that we aren't about to experience stagflation, that we are in fact experiencing stagflation. You hear about jobs growth in the economy, and working people know all about that. They have two or three jobs each to maintain their standard of living. Um, Interesting times. Let's just say interesting times. The Department of Government Efficiency is probably worth talking about. You'll recall, I think, that they were going to cut $2 trillion out of the budget. They found 160 billion that they think they might be able to cut on the installment plan. Uh, in anticipation of cutting this budget, of course, they tabled a budget calling for the elimination of the debt ceiling and proposing the fourth largest recorded deficit in recorded history. The additional spending was in the current quarter, and the anticipated savings were spread over the next 8 years. In other words, trust me, I'm a politician. Your check is in the mail. Uh, Interesting times. On the other side, there's some incredibly good stuff going on. I think artificial intelligence has the potential to be extremely useful for the economy at large, if not for the displaced workers. Uh, I recently saw an AI application that can run on Bloomberg, sorting the Bloomberg database, that literally does compare and contrast valuation work with 5 years of financials.
Wow.
And this AI function can do in 2 minutes, what would have taken me as a 30-year-old a year to accomplish. Doing really good work where you analyze balance sheet and income statement progression over 5 years manually used to involve, first of all, gathering 5 years of quarterly statements, physically pulling the staples out of them, and arranging them sequentially on a board table, and then painstakingly going quarter by quarter by quarter. It would take as much as 6 weeks to do one company, allocating sort of 2 or 3 hours per day to that. You can utilize Bloomberg to sort, first of all, your customer list by any number of variables you want. You can take the 70,000 public companies in the world down to a more manageable subset, like 500. Program the variables that you want sorted for, hit start, and it will compile a table for you in 2 minutes.
That is incredible.
The point of all this is that the drudgery involved in many intellectual tasks will be a thing of the past in a couple of years. That is very difficult for people who feed themselves from drudge work. In fact, the young rec rule, who would have thought up the table, got the result, and then presented the result to his employer, probably Peter Cundall in my youth, that Rick Rule will be replaced. Well, he's already been replaced. Right now, his name is Sanjay. He's Indian, not Rick. That person will be replaced by AI. But knowing what questions to ask, knowing what assemblage of data is relevant, knowing how to present that data, and importantly, knowing how to draw conclusions and profit from it, will become enormously lucrative, enormously lucrative. And a lot of the drudge work involved in things like computer programming becomes a thing of the past. I had a computer malfunction yesterday that took Callie and I and Albert about 3 hours to fix. I learned this morning that had I understood how to ask the right questions with AI could have not merely identified the problem, but fixed the problem for me. The problem was that neither Callie nor Albert nor Rick understood well enough how to ask the question, the correct question, correctly. The consequence of that is that we had a rather long wrestling match. About 9 hours went into the cure. And by the way, 3 hours, three of those hours, Albert's hours, were high value hours. He's an engineer. He knows this stuff. The truth is that AI could have solved that problem, saved the world those 9 hours to be productively employed in another task, and solved the problem.
Yeah, it's really impressive what it can do. So macro thoughts, you see Trump, Newsom, Elon throwing slings, distracting from what's actually going on. A lot of
And
it
something else, the lower copper prices and the lower oil prices don't suggest we're headed to a recession. It suggests we're in a recession.
that we're in one. Yeah.
Yeah, I mean, oil's used every day. The market action in oil is not forward thinking, it's current. Supply, which is to say global production, is at least peaked, but the price continues to go low. That tells you all about demand, and it tells you all about demand, not just in the United States. So I suspect that the real world picture we're seeing in the economy is softer than we believe.
Okay. Okay. So you see us as it being in stagflation now.
I do.
Okay. Okay.
I do.
And the Doge Committee, I found a meme that I thought was very pertinent to it. Trump saying that he has a plan to cut spending, and this is his plan. It's to
Yep.
increase spending. Um, and also AI, you see as um, basically changing the world. I use it with my show. My editor uses it all the time in the descriptions of these shows. It has saved us an enormous amount of time, and I'm able to do, instead of one interview a week, I'm able to do 2, 3, sometimes 4. And that would be impossible without ChatGPT. So I can definitely see what you're saying there. And you're right, it's about asking it the correct questions. It'll do just about anything you want it to do. You just have to learn how to ask it the correct things, or it's going to give you whatever you ask.
I understand from a youngster who's at the Rural Classroom, youngster, of course, to me is anybody younger than 60, that AI can annotate all of my interviews and post annotated descriptions at the Rural Classroom with timestamps so that if people don't want to hear my normal BS about the economy, they can cut right to gold stocks or whatever. I think that would be really useful. Just somebody has to show me, or better yet, Callie, how to do it.
Yeah. Yes. Well, I can show you what I've learned so far. It's not perfect. Sometimes it catches little things, but it gets it pretty close.
Steve, you must compare it to what is, which is to say me, very imperfect.
Okay, let's talk some gold and silver. So they've had a nice run. I thought we'd be in a little bit more of a correction period for gold, but it just seems to be kind of, I call it bullish consolidation. It's basically going sideways.
Yeah.
Um, we've had a really nice spike in silver lately. Maybe just some macro thoughts on the two of those.
Uh, what we've seen is something that interest traders doesn't matter to me at all. Uh, when we have a silver breakout, Steve, you won't need me to describe it for you. I've seen 3 silver bull markets in my life, and $2 moves, while they excite people who've been waiting for them for 3 or 4 years, are absolutely positively irrelevant. Is this a sign we're going somewhere? I don't know. And frankly, I don't care. Um, I've been through 3 silver bull markets. In the first one, the price went from $1.25 to 50. In the second one, the price went from $4 to 50. In the third one, the price went from $5 or $6 to 50. Do you get it? I mean, tenfold moves.
Yeah, yeah, yeah.
The move going from 33 to 36, I mean, did anybody trade it? Nobody I know. So while it gets people's pulses going, it doesn't matter a bit to me. I I believe, because I have noticed that about halfway through a precious metals bull market, leadership goes from gold to silver. My gut feeling is we're not halfway through this market.
Okay.
My gut feeling, and don't take this to the bank, just take it under advisement. My gut feeling is that this market is going to resemble the 1970s more than any subsequent market. That was an 11-year bull market where the price of gold went up 30-fold. It did it because the purchasing power of the US dollar declined by 75%. I think the next 10 years sees the US dollar decline in purchasing power, not relevant to other currencies, but absolutely by 75% again. I don't believe the gold price is going to go 30-fold because in the last 25 years, it's already up 12-fold. But a gold price move in nominal terms that was a triple from here or a quadruple doesn't seem that out of line. Meanwhile, what we're seeing, which is to say leadership changing from the metal itself to the best quality equities, which is exactly what we've seen in 2025, is exactly concurrent to what we've seen about a quarter of the way through the last 3 gold bull markets. So if past is prologue, rather than having this market long of tooth, we're about a quarter of the way through it. I'm not saying that this market will perform the way prior ones have, but if it does, that's what happened. Uh, so I hope all that helps.
Yeah. Okay. So if past is prologue, gold moves first, then silver moves exponentially so afterwards. That typically happens about halfway through the market. But right now, we're seeing that the majors have moved, and that typically happens about a quarter of the way through. So
Correct.
if past is prologue, we're 25% of the way through this bull run. I saw a interesting, so Gold Royalty Corporation. We've been talking about this one for years.
Yeah.
We had a nice move today. It's up 10 or 12% or so. I see that they've got a meeting coming up tomorrow morning, which I'll be at. Any thoughts on this, or is this just like any other day where these these juniors can move up or down depending on which way the wind blows?
It may be a consequence of the interview I did with Amir Adnani. This is an extremely closely held company. The biggest shareholder is Gold Mining Inc. Those shares aren't for sale. I'm a big shareholder. There's a couple other big shareholders. Remember that prices are set on the margin. It doesn't take a very large plurality of buyers over sellers to give you price escalation like this. I'm not a technical analyst, but the period had a fairly long, pardon me, the stock had a fairly long consolidation period.
Yeah.
And at that point in time, what might have happened is that the sloppy shares were consolidated. You know, stock went from weak hands to strong hands. I don't know. There is no fundamental news that I'm aware of that would explain the part of the chart on my right.
Okay. Okay. All right. Okay. Okay. Another one that I want to pick your brain on is Nations Royalty. So they're coming out to the Rural Symposium. I was selfishly very happy to hear that because I'm an investor. I liked your interview with Derek a lot. I'll interview him when I get out there. Any updates on the Brucejack mine? You know, they've got a royalty tied to that one, but it's kind of opaque. Do you have any insight into that?
Yeah, I think if you're going to invest in Nations Royalty, you invest in Nations Royalty because you believe in the process.
Okay.
Uh, Royalty and streaming is a great business, but you have to have a durable competitive advantage because there's too many guys in royalty and streaming.
Yeah.
Nations Royalty sells at a premium price relative to their current free cash flow. Most of the ascribed net present value in Nations Royalty is around the Kerr-Sulphurets deposit. It's around Rudy Frank's deal.
Yeah. The KSM.
We don't
Yeah.
we don't know when that's going to happen. So it's difficult to do a net present value scenario because you don't know when the start date is. What you do know is that there is a lot of wealth controlled by indigenous people around the world, and there is an untapped resource available to them, which is called politics. You can't develop a project in rural Canada without First Nations assent. And the First Nations are tired of giving assent with no benefit. So the idea that Nations Royalty could unlock some of this latent wealth and assist the First Nations in the political process whereby the mining company gets access, benefiting the mining company, the First Nations, and Nations Royalty shareholders is a superb outcome. It's important to note that Nations Royalty, in addition to being controlled 77% by Indigenous people, is effectively run by Indigenous people. The two young guys, Derek and Cody Penner,
Mhm.
who are the tier 2 managers there, are first-class human beings. These are not DEI hires. They are natives. I would love to hire either of these two myself, and I'd love them to work for me in Germany or Australia or Chile. But the fact that they are involved building an Indigenous controlled royalty company, Canadian, in Canada, means that they are really, really, really suited to the task at hand. When you come down to Boca, you will have the opportunity to meet physically, if you haven't yet, Derek
Yeah.
and Cody Penner. I'm a huge Cody Penner fan. And you will not be able to help but be impressed. Understand that on price to cash flow on a trailing basis, the company's overpriced. You need to be willing to stomach that because you need to be willing to do what Buffett has done, which is invest in moats that are durable and sustainable. I'm not suggesting, by the way, that Buffett would invest in Nations Royalty. Don't get me wrong. I'm just suggesting that the qualifications that he looked for, a superior business model and a durable competitive advantage, run by honest, competent people, is all present here.
Okay. Okay. Yeah. And super small for anyone watching this show, retail. Almost nothing is available to retail. So
Yeah,
any
do not
purchases.
compete with each other on the bid if you like what you hear here. Use a good till cancel limit order.
Yes. Yeah. Yeah. Yes. We will blow this thing up if everyone just buys. Okay. Another one that we've had some recent-ish news on is Pan American Silver. Now, they acquired, well, they haven't done it yet, but they put in the bid for MAG, and
Yep.
we had a massive sell-off. And there's these moments when that happens where it's kind of like panic time. It's like,
Yep.
is this a good deal or is it not? And it took me a couple days to realize that, okay, I think this is fantastic. And so I got in and now that I can see the future, I was right. How do you handle these things? Like when information's just coming in faster than you can process, how do you do that?
Well, the first thing I do is try to determine for myself whether the acquisition on a per share basis is accretive or dilutive.
Okay.
And if I trust the managers, in the case of Pan American, I do, I look for the probability of synergy. which is to say that after having been acquired by Pan American, the general and administrative expense at MAG, which was, by the way, absurdly high,
Yes.
goes away.
Yeah.
And so there's another form of accretion. The third thing is that at Pan American's scale, merely adding more mass increases the trading volume and the liquidity. So the stock re-rates for scale. By the metrics that we look at, the acquisition was accretive. It was accretive because MAG sold at a discount to what it would have sold at had they been the majority owner or the operator of their mine. It was a 44% minority interest. Pan American believes that they can manage that relationship. They believe, and I believe, that Fresnillo and their parent Peñoles have grossly underexplored the Fresnillo district and the joint venture with MAG, in particular the strike extensions to what is likely the energy source for the whole district. So there's, from my viewpoint, a lot of upside. This sell-off that you see almost always accompanies these big mergers. The acquirer pays a premium. So the institutional investors right away buy the target and they sell the acquirer. Looking longer term, people who owned shares in the acquired company often owned it in anticipation of a takeover. When they get their shares in the new currency, they often sell them. So the sell-off that you see is demonstrated in your chart. One of my most consistent trading tactics, and I'm not a trader, has been to buy these sell-offs, which in the case of Pan American, I did. People need to note that the synergies that I talk about, the financial synergies from this merger, will take a year to show up. They need to note, too, that when the transaction completes and the shareholders of MAG become shareholders of Pan American, many of them will sell. They held for a takeover. They got a takeover. They drive on. They also need to note that some other news came out in Pan American very recently, which is awful, which is to say that Pan American's attempts to forge community consensus in northern Guatemala around the Cascabel asset have thus far been a failure. And in fact, the indigenous group around Cascabel has been funded by some environmental GEOs to take a publicity trip to Vancouver to protest in front of Pan American and to sue Pan American in Canadian courts. This noise won't be helpful, but the ongoing, so far unsuccessful efforts by Pan American to achieve community consensus, which would allow them to bring a 500 million ounce high-grade silver deposit back into production, are at the very best delayed.
Okay. Yeah, that was one of the things that kind of tipped me. I never owned MAG, and it the number one reason was I thought their G&A was way too high, and this kind of solved that. Is what you're saying is because you don't need the same two management boards. You can get rid of one and keep Pan American, and the other one goes away.
You know, one wonders why that level of G&A existed when their whole job was to audit Fresnillo.
Yeah.
They didn't operate anything. And you know the answer, and I know the answer. They took the money because they could.
Yeah. 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 And I also like too that now Pan American is going to have a lot more silver, so that'll be cool. Much more leverage to the silver price. I feel a lot more exposed to silver after this than I did before.
You know, if you think about the potential operating synergy, mature silver producers frequently sell at 15 times EBIT. If you take 20 or 25 million dollars out of G&A times 15, there's a lot of synergy. There's a lot of synergy right there.
Yes. Okay, all right. Ross Beatty fans, here we are. Okay, let's move on to uranium. So this is just the spot price of uranium. Circles drawn on take profit zone. Should probably move another circle down here on where we started backing up the truck again. We've had a nice little run in uranium here recently. Maybe just give us your macro thoughts on this. I recently put in a hedge because I felt like it had run a little bit too far too fast. I bought a put on URA. It looks like that's going to expire worthless. What are your macro thoughts on uranium right now?
I bought some uranium stocks 4 or 5 months ago when the hate was so overwhelming. And believe me, I didn't need more uranium stocks, Steve. As you know, I have a silo full of them. But the hate was so overwhelming. People on X that used to have uranium as part of their posting handle capitulated. And I love that. When I used to run a brokerage firm, one of the things I would do is I'd check the cage every day. And every day where the buy tickets were more than 4 times the sell tickets, I'd find something to sell. And every day where the sell tickets overwhelmed the buy tickets by more than 4 to 1, I'd find something to buy. And the overwhelming amount of hate that the uranium juniors enjoyed 4, 5, 6 months ago was so overwhelming. I just had to buy some stock in anticipation merely of the cessation of the hate. That trading position, which was about 20% of my total uranium junior position, has now been sold, been turned into cash. The reason to buy the stocks, that trading position, was hate. And the hate evaporated, so I sold them. I still have 80% of my position. I don't pay much attention to the spot market because I consider the spot market to be a factoid. It happens to be true, but it's less and less relevant. Most days, more dollar volume trading takes place in the Sprott Physical Uranium Trust than in the spot market. So one could say that the spot market has become the spot market in terms of price reference. But more importantly, the trades that are taking place in the uranium business are now taking place increasingly in the term market. And that's what's changed. The term market gives both buyers and sellers visibility as to price and volume over as long as 30 years. This occurs in no other commodity. And that has two important aspects. One, a junior, say a Paladin, that would be otherwise unable to finance a project to production because they don't have the balance sheet strength, can in effect borrow the balance sheet of the purchaser. If they're selling, 2 million pounds a year contractually to Tokyo, Tokyo Electric Power, China General Nuclear, Duke Power, those people, they can use those investment grade credit products as collateral. Hard lenders, me as an example, are attracted to that because I know the volume, I know the price for 15 years out, so I know I get I get paid back. But also, lazy securities analysts, again, me, are able much more easily to do revenue forecasts if you know how much is going to be sold and at what price and to who. You can't do this in any other commodity on the planet. Over 5 years, not right now, because right now there's a lot of opacity around these contracts. Over 5 years, uranium companies will enjoy the lowest cost of capital of any resource companies on the planet because of these contracts. And not one in 1,000 uranium speculators understands how profound that change is. Most of them don't care either. Most of them say, oh, well, the spot price is up 7 cents, or amalgamated orangutan uranium technically broke out, or something like that. What matters is the structural supply deficit, the pace of restarts, and the fueling cycle on top of the contract market. And all of those statistics are very, very bullish. Could the equities consolidate here? Sure. In the near term, could the spot and the term uranium market fall as a consequence of weakening economies, reducing the need to increase access to electricity in export-driven economies, Korea, China, Japan. Sure, absolutely. Over 5 years, it's not merely higher. I'm not talking about uranium. I'm talking about the uranium juniors. Not merely higher, but much higher. And remember that these equities are driven from the top. You and I talked a year ago about my concern with Cameco taking over Westinghouse. Will a mining company be able to operate an engineering company? The first quarter was abysmal. Turns out Cameco was cleaning house. Last quarter was spectacular. I'm not saying it's out of the woods yet, but Westinghouse has made a proposal to build 10 reactors in the US where they would build them, they would own them, they would operate them. They would go from being a uranium producer to selling electricity. If they're able to permit these, notice that they wouldn't be building one reactor, they'd be building 10. I'm not saying they're going to be able to do it, but if they are able to, this is an annuity that will last them 50 or 60 years.
Yeah. Yeah. Full cycle. Okay. So you see, let me share my screen here. This is courtesy of Cameco. Here's the spot price is the blue line down below, and the term price is up above. And so rather than this little tiny arbitrage that you're talking about here, basically you're saying what matters is there's a structural supply deficit. What matters is the pace of restarts, how many new nuclear reactors are coming online, and the contracting cycle, which is basically as time goes on here, the only way they're going to be able to get money to finance these mines and stuff is to give these to give basically banks the how can I say it? Let them know what the price is going to be going out. So now you can do your calculations and you can see that, oh, well, this first year they're going to be paying $80, and then the year after that they're going to pay 90, and the year after that they're going to pay 100. And as more companies do this, you can literally put it into a spreadsheet or maybe Chat GPT, and it'll do it for you, and get an answer. And that will take a market that is very, very confusing and blurry into something with a lot of clarity. Is that
Yeah,
something?
you had two lines there, a term market and a spot market. The spot market can be up and down over time.
Yeah.
Nobody knows where it's going to go. I have my suspicion, but the term market is very, very, very different. The term market's predictable. That's a value line.
Yeah.
The second thing, Steve, that I think will happen, and pardon me, Westinghouse slash Cameco has said it will happen, is that a developer, a Boss Energy, a Paladin, a Uranium Energy, if they wanted to, could go to Westinghouse, Cameco, and Westinghouse would bid a fixed price contract to build a mine, meaning they would handle all the overruns themselves. So now the developer can go to the market and say, this mine will cost us $1 billion to build. No more, $1 billion to build. Here's our financing terms with the bank. Here's how much uranium we're going to sell over 15 years. Westinghouse knows they'll get paid because they know what they can build the mine for, and they know what the product can be sold for. The banks know that the project will be done on time, on budget, or else a financial penalty, which will be paid to the company, which they will grab. The arbitrage between the net present value of the contract and the capitalized value of the construction, that delta is where all the value is. And we will be better able to calculate that in the uranium business than in any other commodity on the planet. And this is hugely important. Boring, to be sure. I've learned at age 72 that being bored is preferable to being terrified.
Okay. Last time we talked, you mentioned that some mutual friends, I guess, of the Trump administration had reached out to you about where what they could do to, with executive orders to streamline some of the uranium in certain states. You gave your opinion. How closely did they follow your advice through these executive orders?
Uh, Without naming names, uh, they are in pretty consistent dialogue with somebody who I know well, who I have a high opinion of, and who, by the way, is a Republican. There are a few things about my public pronouncements that are inconvenient for them. This person is much more to their liking, but his opinions are very consistent with mine. So if it's convenient for the Trump administration to pay attention to the industry, the person that they have chosen to represent the industry's view is a top quality person, both for them and the industry. They chose wisely, but they
Okay.
chose one of their own.
Yeah. 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 Okay. Well, there was definitely a re-rating. Let's see what time we got. A quick hit on platinum and palladium. Okay, we have just had an awesome a visual representation of this is just incredible here. So for the last 2 years, I've been just buying whenever platinum or palladium hit $900. I just you know clicking buy on the SPPP and Sprott Platinum and Palladium Trust, and here's platinum here. We've just had a monster breakout. Has Russia finally run out of platinum and palladium? Rick, do you have any line on anyone there?
Sadly, the Russians don't respond to my inquiries. uh, you know, uh, I mean, nor nickel is really what matters in that business, and who knows? I think it was probably oversold. Whether or not that spike is justified, is a different question. But certainly at the prevailing prices for platinum and palladium, I don't mean the spike price, but at the how would you say the equilibrium price,
Yeah.
the price of platinum and palladium is below the total cost of production. Not the mine site cost necessarily, but total cost includes cost of capital and social rents, tax.
Mhm.
There has been no room left over for sustaining capital. If you look at the operating results of Sibanye-Stillwater going back 6 years, those guys are hugely efficient operators, and that tells you what a difficult business it is.
Yeah. Yeah.
Like you, I reflect my own purchases through the Sprott physical product because I can't tell you whether platinum or palladium will enjoy the best new technological applications, fabrication technologies. I'm not smart enough, so I want to own them both. I am also attracted to, as I think you are, as a speculation, Bravo. Again, not a buy recommendation, but in the case of an advanced explorer, where they control what is potentially a world-class deposit, but where it won't be in production for 4 or 5 years, you get to be a leveraged forward thinker. And I really like that. I figure if I'm right in that stock, I have 3 or 4 or 500% upside. If I'm wrong in that stock, I have a 50% downside. Uh, I like to play these games both ways, which is to say, I like to buy a probable move in a commodity by owning the commodity, and then by buying equity outliers, expressing the theme. I would prefer, if we weren't at war, to buy Nornickel. I would prefer to buy the highest quality company in the platinum and palladium, and by the way, nickel space in the world, which is the old Norilsk. For various reasons, as an American, particularly an American with a bank in front of the regulators for charter, buying Nornickel is not something I can avail myself of. Uh, so I've chosen a much more speculative name on the equity side.
Okay. All right. Yeah. When they took all my Russian stocks, that made me a little gun shy. Okay. Let's
I
hit.
still have mine, by the way. So we'll see. We'll see.
Yeah. Yeah. We'll see if we're able to recoup those or not. Quickly here on oil, we've got. I've noticed some oil rigs in the U.S. are, let me share my screen here, a visual representation
Yep.
of it, and boom, there we go. Okay, this is courtesy of bar charts on Twitter. So these are the oil rigs. I think we're down to
Rig count. Yeah.
442. Anything with this increased or decreased production out of OPEC? What do you see with does this mean
That
anything, or are they just more
that
efficient
that,
now?
that one's pretty easy. It comes down to four factors, maybe five. Global production isn't going up, which tells you that the economy is soft. When oil production isn't increasing, but the oil price is decreasing, it tells you that there's a demand problem, not a supply problem. The U.S. rig count is partly a function of the profitability, or rather the lack of profitability, of U.S. drilling operations at $60 a barrel. Operating costs in the Permian Basin, particularly saltwater disposal costs, but other costs too, are trending up at the same time that the oil price is trending down. Meanwhile, we've spent 5 or 6 years drilling off our drilled, uncompleted, and our behind pipe reserves to the extent that at $60, we probably have 10% of the prior inventory of A-grade locations that we used to have, which is to say, we've drilled off most of our high quality inventory. Meanwhile, the increase in interest rates and the increase in below investment grade interest rates relative to investment grade interest rates has made debt capital much more expensive for oil companies at the same time that their drilling inventory is less attractive and the price is less attractive. And on top of that, the share price declines, particularly in the independent space, but also in the integrated space, means that the cost of equity capital has risen at the same time that the debt cost has risen, and their margins have contracted. These are self-correcting phenomenon, Steve. You have heard me say to you more times than you care to remember, the cure for low prices is low prices. The cure for high prices is high prices. The declining rig count by itself will clear up excess inventory, particularly in the Permian. The gas glut that we saw and talked about, you and I, 2 years ago, as a consequence of byproduct gas production, that's already gone.
Yeah.
Byproduct gas production has fallen, while gas utilization, the exact circumstance that you and I talked about 2 years ago, has occurred. The gas utilization is up. The infrastructure for processing and transporting byproduct gas is up, and the byproduct production is down. Hence, the price of gas onshore from the Permian has risen threefold.
Okay. All right. So global demand is not going up, which kind of leads to your global recession forecast. The U.S. rig count is basically just a lack of profitability. Costs have gone up and oil prices have gone down, which make it less profitable. For the last 5 to 6 years, the easy stuff has been gotten. Debt is more expensive, and the cost of equity capital is also more expensive, which, okay, I just wanted to make sure that my thesis is still in place, and now is a good time to be buying oil stocks.
Yeah, I mean, what could go wrong? The recession could get steeper.
Yeah.
That could happen. What will go right and wrong is that technology will improve. As technology improves, particularly technology around removing more material, more oil and gas from tight formations. We will do this. I don't know how quickly we will do it. As we do it, more locations that are currently grade B locations become grade A locations.
Yeah.
Unfortunately, my knowledge of technology is unblemished by success. So I can't tell you which of these technologies will emerge or when they'll emerge. But you do need to know that there are technological answers to some of today's economic questions, and they will sort themselves out over time.
Okay. Quick shout out to the Rural Classroom. I just wanted to share a post to give, if you guys haven't joined the Rural Classroom yet, you really got to ask yourself what you're doing, because here's a post by a member, net present value versus EV. So he did a calculation here. We got feedback from someone else doing it. And over here, one of the guys did a deep dive on Rio 2, our project down the Phoenix gold mine down in Chile. A really deep dive. I just printed it out. It's 14 pages long. He leaves a link right down in there for it. It's pretty impressive. Tell everyone what they can expect going to the Rule Classroom and about the premium version, the Rule Classroom Plus.
Well, I got to say, first of all, I'm pleased as punch about this. This is precisely what I wanted to have happen at the Real Classroom. I've spent 50 years learning how to do this, Steve, and I don't have another 50 years. You know, at some time, Father Time's going to take away what Mother Nature gave. And what I wanted to do at the Real Classroom is put in place a compendium of what I've learned. Introduction to Natural Resource Investing is just that. We have 9 episodes of what I hope will be a 60-episode series on valuation. But then I wanted to attract a community that would add to those tools their own tools and discuss amongst themselves techniques for implementing the strategies that I taught to do their own work. Thus far, about 13,000 people have taken us up on it, joined the Rule Classroom. My hope is that eventually the Rule Classroom will be a self-reinforcing community of, 20,000 hard active users. And that those 25,000 active users can insulate each other from the misinformation that pollutes the mining business. And my hope is that they can collectively negotiate financing terms with mining companies. We're going to do some work on that this year. We're going to allow, when the regulators allow us, mining companies to present to the entire classroom in a format similar to Shark Tank. We want to be able to say to the mining companies, you think you're selling for half what you're worth? Prove it. If you are, we can solve that problem for you today. If you can't, you may never raise money again. So my hope is that I deliver to the mining community a group of hard, smart, rich, willing investors that the mining community hasn't seen before. My hope to the Rule Classroom is that they develop into a knowledgeable community that can represent each other in negotiations with acquirers of capital in a knowing way. And if I do that, I mean, it sounds sappy, but that'll be my life's work.
Yeah, your legacy. I'm
That's
honored
right.
to be a part of it. We've got so you can try out the Rule Classroom for free. There is a link down below, and also there's the premium version you can try out free for 2 months. Rick and I will be there tomorrow taking Q&A. Your questions, you submit them to Rick, and I ask him on the air. And we'll be doing that next week as well, same time on Thursday at 12:30 Pacific.
Anybody, by the way, can watch the Q&A. You have to be a premium member to ask questions in the Q&A. That's part of the value proposition around the premium version. There are other parts to the value proposition.
Yes, yeah, we have Adrian Day in there, basically our portfolio manager. We've got Joel Littman, the professor, big macro thinker. We've got Joe Mazumdar, who is our geologist. I'm honored to be a part of it. It's a lot of fun. Yes. All right. Well, I know we're tapping on the hour here, Rick. Thank you for coming back on the show. Any final thoughts?
Yeah. If you like what I have to say, 2 things. I can make it free for you. Go to ruleinvestmentmedia.com, list your natural resource stocks. I'll personally review them. Note I'm about 250 reviews behind, so be a little patient. And if you want to pay me, I'd like that too. You can pay me by attending either live or via live stream our Natural Resources Investment Symposium, July 7 through 11 in Boca Raton. I could tell you a whole bunch of reasons why it's the best investment conference around natural resources in the world. It is, but I'll simplify that. If you attend live or via live stream, we will refund your money if you don't think you got your money's worth. No other investment conference in the world has the confidence to do that. Whether you attend live or via live stream, if you don't think you got your money's worth, we'll give you your money back. But we're going to give you your money's worth. Here's why. Unlike any other investment conference on the planet, I have interviewed every exhibitor and every speaker before the conference. Go to the Rule Classroom or go to the Rule Investment Media channel at YouTube, and you can review everybody who's going to speak there so that you can allocate your time at the conference more efficiently. Further, after the conference, we have recordings of the conference, of the entire proceedings, including all the breakout sessions, available for you for a year. And we will maintain, or rather you will participate in and maintain, discussion groups at the Rule Classroom so that you can compare your notes around the speakers, the issues, and the issuers at the conference with your fellow attendees for a year afterwards. In other words, just like you used to do in high school, in addition to your notes, you can crib your neighbor's notes. For all of those reasons, if you're a serious natural resource investor, there's no reason I can think of why you wouldn't take the risk when there is no financial risk. And you would attend the classroom, either live, which would be my preference, or via live stream from the comforts and convenience of your own home. Rule Symposium, July 7 through 11 in Boca Raton, or via live stream wherever you happen to be.
Awesome. I look forward to it. This is going to be my second one, well, second live one. And yeah, I'd love to meet you out there in person, shake hands with me and Rick Rule, and maybe even see you on the boat cruise. That'd be a lot of fun. Rick, thank you. As always, you have a great rest of the day.
Pleasure. Thank you, sir.
Yes, and thank you for tuning in. All of the links will be in the pinned comment below. Go to stevebartonmoney.com for more, and have a wonderful day.